Eddie Ghabour with us this Wednesday morning. We're going to hear from the Federal Reserve at about 2 o'clock, 3 o'clock Eastern time this afternoon. My first question to you is this. What happens to the market if Jay Powell comes on really, really hawkish, pounding the table on more rate increases and reining in the money supply? What happens to the market?
If he comes out and does that, I expect the S&P to take the next leg down at least 10% from there, because the economy is slowing down. And as I continue to say, the second quarter will be worse. And if you accelerate tightening into that, it is a risk-off trade. So I'm hoping that they're smart in how they position this.
Okay.
I still think the S&P will be down 20 in any scenario. It's just a matter of whether we delay it or not.
Okay, let's have the other scenario for the Fed this afternoon. Supposing they come on as dovish.
If they come out dovish, it's going to be risk on for a very short time. We will get that rally, that bear market bounce rally type that we will get. And I would stress, again, investors will get one last chance, if they didn't listen to our warning back in November, to de-risk during that time period and assess their risk situation. Because if they don't at that point in time, when we take that next leg down, it will be ugly.
So you're in favor of selling any leg up. A bounce, you sell, because there's a bear market still to come. That's where you're coming from.
That's exactly right, Stuart. Look, the facts are the facts. They're still going to tighten no matter how he words it today, and we're still slowing down. And look at inflation. It is crushing the consumer. The consumer spending numbers on discretionary items are going to continue to go down over the next 2 quarters. So any way you slice it, there's not a lot of positives. These short-term rallies are just bear market bounce rallies, and buying opportunities, in my opinion, won't come until I see 20% down on the S&P this year.
Would you say that you are popular on Wall Street these days?
Well, I don't care if I'm popular. I care if I'm right. That's what my clients pay me for. And so far, I think the market calls have been accurate here in the near term, because it is non-consensus. Now, the only thing that will change my mind is if the Fed just does one rate hike. I don't understand anyone that thinks this economy is strong enough to handle 4.
Well, I mean, it could be that the Fed will take into account the huge selling that we've seen on Wall Street. They don't like that. They want to maintain asset prices. So you could be right. You could see a very dovish Fed. Last word to you.
I agree. And I do think the Fed does look at markets. Look, that old narrative that the market only affects the wealthy is dead wrong. Middle America depends on their 401ks for their livelihood.
Yeah, 100 million Americans have a piece of the market action. It matters in Middle America. Eddie Ghabour, you've been right so far. We'll see about what happens in the future. Eddie, we'll see you later.
All right.
Thanks a lot, man.